Good morning, it's Tess, and this is Stay Curious with Tess. And today I want to talk about what is an asset. For those that are just joining me, I talk about financial tools. I am a 35-year statutory accountant who prepared statements that were filed with the regulatory boards. And in the past few years, I've become a licensed life insurance agent focused on the infinite banking process. So what I decided to do is shift lives. I used to do a lot of lives related to mindset, and while that's still important to me, and it was the lead up to my book, Courage to Change, which is available on Amazon, now my shift has shifted into educating and helping people take back financial control through the infinite banking process. So what I decided is I would start talking about finance terms and different meanings that people have. And I realized in talking to clients that sometimes understanding is a little different. So I thought I would start sharing here on this platform. And then for anyone who needs more information, please click the link and book a call because I'd be happy to talk to you. But today I wanted to talk about an asset because there is some confusion around that sometimes. And the reason can be because an asset can hold a couple of different hats. What is an asset, and will an asset still require cash flow, or meaning will it cost you something to have that asset? So what I think is important, or what I'm trying to do, is to define things, help us to understand, because if we make better decisions, we make better decisions that lead to better financial decisions when we have understanding before we make that decision. So what is an asset? An asset is something you own or control that has value and is expected to provide a future economic benefit. In simple terms, something of value that can benefit you in the future. Now, I want you to stay curious because there is something important about the word asset. Sometimes people use the word asset with different meanings or with different attachments, or in a case of a policy with different riders on it. And riders are just a specific set of rules, like we'll have a rider for chronic illness on some policy. So not to complicate it more, but there are different things that can happen to an asset that can twist it a little bit when you're trying to make decisions about your future. So before we decide to agree or disagree with somebody, we need to understand the definition they are using for the word asset. So now I'll go right to the accounting perspective because that is my background, that is my history, and that is where I lived and still live to this day for my career. And from an accounting perspective, an asset is something you own or control. And examples are things like cash, savings accounts, homes, businesses, investments, retirement accounts, cash value in a permanent life insurance policy. Assets can also be like items that you own in your home, your car, furniture, equipment, computers, technology. All those things are assets. But then I think we have to understand a little more about the word asset, because assets can help us grow, or sometimes assets can require expenses to keep them going. So we really want to know that when we're purchasing assets, which type of asset do we have, and plan accordingly. Like in previous talks, I've talked about cash flow or net worth, and a lot of these terms, as they come together and build a whole picture, you'll want to know the alternative approaches that people have or thoughts they have related to some of these terms. So the cash flow perspective of an asset. What financial educators evaluate assets by? Some financial educators evaluate assets by asking a different question. What does this asset do? Or more specifically, does it create cash flow? Does it bring money in? Or does it require cash flow? Does it spend money? Or does it do both? And in some cases, one, the other, or both occur. So I want you to notice the difference. From an accounting perspective, they want to know what it is and does it have value, so that they can add it onto your balance sheet and say, hey, they own a car, it's worth $15,000. The other side of it may be a liability that you owe somebody, but right now the accounting person's just looking at, hey, what is the asset? Now the cash flow perspective is, what does it do? So both perspectives can provide information. The key is to understanding which question is being asked, because assets can be stagnant, just have a dollar value attached to them. Sometimes they can grow. They are income producing. Some annuities are income producing. Rental properties can be income producing. A business can be income producing. Or some assets can cost you money. You can have a home, but there might be mortgage attached to it. You're going to have property taxes. You're going to have utilities. So understanding that part of it and keeping all ideas of it together when you're evaluating your financials or your decisions for the future will be helpful. So now let's look at some examples. A checking account is considered a liquid asset, and it's really kind of a landing spot for your cash. It allows you, we hope, always to have quick access to cash. It allows you to pay your expenses. It's just, I almost think of it sometimes as just a cycling center. You put your income in, it comes out, income in, out. Sometimes it'll give you a little bit of an income piece of it as interest, but for the most part, that's not what you would use as an investment tool. Sometimes it can cost you money because there may be service charges, but it's a place where money tends to go in and out, and most all of us have checking accounts. Savings accounts, I think, are just a little one branch away from a checking account, in that the idea is maybe to give you a place to put your money so that you don't think about it, and they'll give you a teeny bit more interest, usually not a whole lot, but a teeny bit more interest. Do I think there are better tools? Of course. I'm an infinite banking practitioner, student of the Nelson Nash Institute, so yeah, I think there are better tools available, but I want you to understand these. So a savings account is considered to be liquid, just like your checking account. But its primary purpose is for short-term savings, and it keeps it accessible if you need expenses, or you know there's a property tax bill or something coming up in the future. So the cash flow impact of a savings account is it's to set money aside, and it may earn interest depending on your particular contract or your particular bank. And it could also cost you as well if you have an bank service charge connected to that account. So now we're going to get into the one that I kind of alluded to a few minutes ago. A home. A home, what type of asset is that? It's a tangible asset. It's something you can see. It's something that we can touch. It's a place where we live. It's a personal use asset. Primarily, it provides a shelter. And it could build equity over time, and that's really generally always the hope and generally what happens, because it increases in value. It becomes a part of your net worth. However, does it make you money? Well, that would depend. Some real estate people may have a home and they'll rent out part of it so that it helps with the expenses of having that home. But if you are a single family home, then there are going to be expenses connected to it. A mortgage payment, if applicable, if you took a loan out against your in order to purchase the home. If there are, for the most part, most of us pay property taxes, insurance, homeowners insurance, maintenance, repairs, utilities, all of these things are expenses to that asset. So while that asset may be appreciating, you have to know there's also an expense side to it. So an asset can increase your net worth and still require cash flow, as long as things are going in the direction where it's growing faster than what it's costing you money. The next thing that I kind of alluded to is rental property. And this is an income-producing asset. Its primary purpose is potential income generation and potential appreciation. And rental property could create cash flow, and could create, generally you're not going to get rental income unless you intend for it to have income-producing properties. Because it's a rental property, so you're getting it, preparing it with the intent to rent it to somebody. But you have to remember that there are also expenses with rental property. So you're going to have to keep these things in mind as you're building your portfolio or your balance sheet, that you have rental property, but there are going to be costs associated with that rental property: maintenance, insurance, fees, taxes, repairs, vacancy costs. What if you lose a tenant and the tenant is gone for a period of time? You're going to have to cover that. So the question becomes, does the income exceed the expenses? And that's something you'll want to keep your finger on, because it could very easily turn from a rental property costing you more than it brought in. So you want to just kind of monitor it, because then you can stay on top of it. So in the case of a home, there's expenses. In the case of rental property, there's expenses. But rental property, the hope is always that your income coming in will cover all of those expenses, plus give you some appreciation to grow your balance sheet. Another item they talk about is business income. And why would you go into business? Is it to lose money? For the most part, no, because I don't think any of us are in that position where we're looking for additional expenses on our tax returns. But if you were, business generally, you go into business because you want to make money. And that's just kind of why we would do it, because you put your heart, mind, soul, body into it, and you put tons and tons of hours. So a business is an income-producing asset. Its primary purpose is to create value, and potentially your intent is for it to generate income. But you got to remember, building a business is not easy. It takes time, and there are expenses associated with it. You've got employees, you've got equipment, you've got marketing, you've got operations, you've got taxes, you've got fees, you've got accounting, you've got all kinds of things that are going to cost you money. So keep in mind that while owning a business is an asset, there are also expenses associated with it. So now the next one I'll talk about, and I'll kind of go through these quickly because there's a few of them, but this is just to kind of give you an idea and to remember that when you're looking at the idea of an asset, make sure you look at all parts of that asset. Is that asset 100% gonna, you put the money down once and then you're gonna continue to gain money, or is there a potential for it costing you money down the road? So 401k or an IRA, this is a retirement asset. Its purpose is for long-term retirement savings. You are going to need cash to contribute to your 401k or your IRA. So there is a cash flow cost to it. There's an expense cost to it. The purpose is for future financial needs. And the thing you need to remember about this particular type of asset is there are restrictions. It can be based on age. It can be based on you're going to pay taxes. So there are rules. Sometimes you can take some out as a loan. Sometimes you can do them for first-time homeowners. But again, all those circumstances and rules are tied into a contract that you need to be familiar with as you start getting involved with this asset. A fixed annuity. Again, a contractual financial asset. I have lotion on my hands, that's why I have these gloves on. A contractual fixed asset or a financial asset. Fixed annuity is a contractual financial asset. Its purpose is accumulation and or income planning according to the contract terms. So again, back to contract terms. You're going to have to understand the specific contract that you're involved in because that's going to dictate how this asset works for you and what costs it may or may not have. So the idea of a fixed annuity is that you fund the contract with money today with the goal of a future accumulation or income. So that is a fixed annuity. A next type of annuity is called an income annuity. And the type of asset is contractual financial asset. Its primary purpose is creating an income stream according to the contract. Again, back to the idea of contract. So the purpose is not the same as a savings account or a retirement account. It was designed for a specific job. Again, back to according to the terms of a contract. Because an income annuity in ways is similar to it feels like a pension in that it will provide you with a guaranteed, and if you have the right contract, a guaranteed income for the rest of your life. That's something I've been very passionate about lately because as somebody who was in the work world, hitting that desk every single day and working, giving it everything I had, there is no pension. I can remember having a conversation with my dad recently, and he's like, no pension? I never realized that. But he was one of the auto workers, and auto workers had a pension. He never realized that had been being phased out in our generation. But they phased it out with the use of the 401k. But the 401k has a whole set of rules too, and it's connected for the most part to the market. And I don't know about you guys, but even with my accounting background, it was really hard to track where all that money was going through the stock market because of those funds that they put together. But that is an income annuity. Now let's go on to whole life policy because that's also another one of my little passions. Annuities is something that I'm very passionate about, and the whole life insurance policy used for infinite banking process is also close to my heart. And the purpose of that is it's a cash value asset. Its primary purpose for a whole life policy, the primary purpose is life insurance protection. A properly designed whole life policy can provide you with a couple of benefits, and that's what this whole talk has been about. An asset can provide you with a growth or a benefit on your balance sheet, but it may also cost you some money. So you want to understand the implications of both sides of that as you acquire assets. So the whole life policy is a cash value asset. Its purpose is life insurance protection, but a properly designed whole life may build cash value. And I'll tell you, the policies we write do build cash value right out of the door. You don't wait several years. You end up with cash value immediately. The percentage depends upon the contract, but there is always a cash value available. And what you want to keep in mind is that there is a cost to having this policy because you do need to fund it with premium deposits every year or every month or semi-quarter or quarterly, depending on where you're at. And it could possibly I know it will. If it's properly designed, it will provide you a cash value so that you can utilize it for maybe life emergencies, purchase of cars, homes, school. There's a lot of uses for it. But again, it's depending on the contract and who wrote that contract for you and their understanding of it. And I think it's an incredible tool, just like annuities, but you have to make sure that you have the right person who's putting the right contract together. But there is an expense to setting these things up as well as an asset. So understanding both sides of it is important. So what is the big lesson here? Well, the big lesson is every one of these can be considered an asset, but they do not all do the same job. A checking account is not designed to be a retirement account. A retirement account is not designed to be an emergency fund. A home is not designed to be a checking account. And an income annuity is not designed to be a savings account. The question is not, what is the best asset? The better question is, what job do I need this asset to do? And I think that's an important thing, and why I've been doing all these talks is that I want to kind of give you some food for thought, some things to think about as you make the financial decisions for your life. The one other thing I kind of wanted to mention is financial decisions become clearer when we understand what something is, what it's designed to do, and what cash flow it creates or requires. So I wanted to give you a couple of thoughts to ponder as I close this off for today. An asset is not defined only by what it's worth. Understanding its purpose and its cash flow impact us and help us understand its role and the role that it plays in our financial life. Because the goal is not just to own assets. The goal is to understand the job that the asset is doing. So I appreciate you guys joining me. Stay tuned. I've already written about 15 of these talks. So you'll definitely see me every day. That is my goal. Remember, the whole idea behind this is to define things so that you better understand them, so that you have tools available as you decide your financial future. And until next time, stay curious, keep learning, and take ownership of your financial education. Thank you for being here. I appreciate you guys.